We're back at Investor Channel's headquarters in San Diego, California. I'm your host, Daniel Wong. On today's program, we welcome the managing partner of Venture Science, Matt Oguz, with us today. Matt, thanks so much for taking the time.
Thank you for having me.
So, Matt, let's jump right into it. What is Venture Science and what do you do there?
Venture Science is a San Francisco headquartered venture capital firm, and we invest in seed stage deals and started to look into the ICOs and cryptocurrency investment opportunities as well. We're a little bit more calculated, I guess, quantitative in comparison to the traditional venture capital firms in that we run every deal through our proprietary vetting algorithms and mechanisms and try to determine their risk levels, and that's what we base our investment decisions on.
So, Matt, with the influx of all these ICO deals, and you mentioned ICO, I haven't heard it pronounced that way before. I'm gonna start using that one. But how do average investors get involved, and how do they start learning more about that?
Well, in the cryptocurrency world, it's more of a community effort as well as the investment opportunity itself. So just listening in on the conversations, whether that's through Twitter channels or Reddit channels or other channels, and kind of learning and understanding and educating yourself first and foremost about cryptocurrencies and the new asset class as a whole. And after that, evaluating investment opportunities, whether that's in Bitcoin or the newly released Bitcoin futures, or the token offerings in the ICO realm of things, whereby you invest in a company's own cryptocurrency and have ownership of that token or currency, so to say, with the expectations of a capital appreciation in hopefully the short, the midterm, and then in the long term. And that's the essence of investing in the crypto world.
Now, I'm going to want to kind of go into how investors do their due diligence, but before we go into that, normally investors have to be accredited. What type of investors can invest in these ICOs? Is it anybody? Is there some sort of level of accreditation or verification they have to go through?
I mean, first and foremost, it requires a certain level of sophistication to understand what you're investing into. So when a company is launching their token offerings or coin offerings, they often put together a series of documents, and then you need to sit down and read through these documents to understand what the company is doing and how the company is going to use the cryptocurrency and what we call the crypto economics of how that currency is going to kind of operate and capture and transfer value throughout, I guess, the tenure of the company. First, you need to understand that. But more importantly, yes, you do have to be an accredited investor for almost all of the coin offerings that I've seen, at least inside the United States, per the SEC regulations. And so I would be very careful with companies that are offering their cryptocurrencies to investors inside the United States, to anybody and everybody. That is not the norm that the SEC mandates. And so being an accredited investor is important. And if you're not, then essentially you should not be even invited to these deals as a United States resident.
So when people are going through the white paper and trying to figure out the token economics or the crypto economics, as you explained, in order to not be considered a security, in order to, if I'm going to invest in an ICO, I want to make sure it's not going to be governed as a security, right? So then what are they looking for in those white papers? Because a lot of times it sounds great. You're reading through the white paper, you go, man, it's a great idea. But what are some of the pitfalls when they're reading through those white papers that might tell them, hey, this thing might be a security and maybe I needed to do a little bit more due diligence to find out how this is going to be classified?
Well, the investor isn't really concerned so much as to whether or not it's a security or utility or what have you. The company is and should be more concerned about what the true characterization of that investment opportunity is in the eyes of the Securities and Exchange Commission. And it's perfectly fine for something to be a security whereby the right registrations or the right exemptions are fulfilled by the company that offers that. So from an investor's point of view, it doesn't really matter. But what matters is whether or not that company complies with all the rules and laws and regulations, because essentially that's going to be important for that investor in terms of how their investment is going to happen inside that company. If the company doesn't comply with the rules, that would put the entire investment in jeopardy, whether or not they're even going to get it back, or what the SEC would might end up enforcing that company to do. So, of course, understanding the characterization of the token is important, but as long as the company is in compliance with the SEC rules and regulations, the investor could invest in a security token or a utility token or the actual, cryptocurrency like Bitcoin or Ethereum or Litecoin.
That's a great point you make there, and it's very, very valuable, I think, to investors here. Now, with the craze of the cryptocurrencies, we're seeing exponential returns, but you're also saying you see that participating in some of these traditional funds, and you've made some very good investments here too. If I'm an investor and I'm looking to get into this, as far as a portfolio strategy, what percentage am I maybe going to devote to this, and what's your opinion on that?
So the institutional investors are right now allocating about 1 to 5% of their overall portfolios into, let's call it, the cryptocurrency asset class, and underneath that asset class, it's maybe the Bitcoins, Ethereums, and then the futures. The Chicago Board of Exchanges released the Bitcoin futures, and then the altcoins, or the coins that are offered by these companies via their initial coin offerings, or the ICOs. And so these kind of combined make the cryptocurrency asset class, as well as perhaps the opportunity to invest in that company's traditional stock, traditional equity. So all of that is inside the realm of the cryptocurrency asset class. And so deploying perhaps 1 to 3 to 5% of your overall portfolio, and of course the remainder of your portfolio, maybe you have some in real estate, some stocks and bonds and currencies and what have you, and really trying to build a balanced portfolio is important. In venture science, we're focused on the cryptocurrency asset class, and we do have our funds and investment syndicates that target that. But as a personal investor myself, I also think about what percentage of my own kind of portfolio should I put into each and every one of these asset classes. And that's an important determination that anybody should make to start with, and then kind of carry out the rest of the investment activities from that point on.
Matt, that's all great information. It looks like that's about all the time we have for today. But Matt, we'd like to thank you for coming on the show today.
Thank you for having me.
Guys, that was the founding partner of Venture Science, Matt Oguz. For more information, go to venture-science.com and follow Matt on Twitter at Matt Oguz. Subscribe to our YouTube channel. Follow us on Twitter and Facebook. Catch all the interviews coming up next time. Thanks so much. Stay tuned for the next interviews here on InvestorTownHall.com.